All right, a big question. How many managers does it take to actually run a fund? Well, Daniel Wiener has focused on one that now has 7 managers, and they come from 3 different firms. Daniel Wiener is the chairman of Advisor Investments, a 15-year-old firm that manages about $1 billion, also specializes in Vanguard and Fidelity funds, and also undiscovered money managers. Daniel, good to have you with us. Thanks for coming in.
Thank you.
Explain this whole idea, because it really was fascinating, this idea that you've got a fund in the Vanguard family. This is Vanguard Explorer Value.
Right.
And it's a new fund, and they've selected 7 managers to run the fund.
Right. This fund is supposed to show up around March of next year. Rather than start the fund off with 1 manager, the way they normally do, they've come right out and said, we're hiring 3 management firms, a total of 7 people among those firms, and they're all going to run pieces of this fund. Vanguard, the experience there has been that they've generally added managers as funds have gotten bigger and, say, cash flows have gotten too high for some of the existing managers. Maybe they want to spread the money around. But every time they add managers, performance goes down. I mean, it just happens. Even Jack Bogle, who founded the firm, talking about a couple of the older funds that had multiple managers, said, you know, you're going to run close to index-like performance when you're all said and done.
I mean, that's the whole goal, right? Is you got to beat some kind of index, some kind of benchmark.
Why would you pay extra expenses for management? And I do believe you can find great managers, but why would you do it if you're just going to get index-like or sub-index performance?
All right, well, let me give you some of the responses, because this came from Vanguard in calling, and they say that they're employing this multi-manager structure because it can benefit, as they believe, from a diversity of thought and reduced overall risk provided by the complementary nature of these investment advisors. And those come from Frontier Capital, Cardinal Capital, Sterling Capital. They all, you know, bottom-up, fundamental approach to selecting small and mid-cap stocks. So they're saying, look, it's a diversified approach.
It absolutely is a diversified approach, and they've done this before. The argument sounds great on paper, and each of these managers may be terrific on paper, but put them all together, it's like taking 3 cooks and throwing them in the kitchen. You're going to end up with slop. Now, maybe they'll prove me wrong, but so far, every time at one of their funds, you look at their original Explorer fund, you look at their Morgan Growth Fund, you look at their Global Equity Fund, all funds that they have added managers to, and as they've added managers, performance relative to their benchmarks have gone downhill.
Have you noticed that that is a function in not just Vanguard, but in the industry in general, that something happens at a fund and the response is, okay, let's get someone to help fix this, and they just add more managers?
Well, generally, most mutual fund companies don't contract out for management. They have people inside. One of the unique aspects of what Vanguard does is they do a lot of their management with outside firms, and they've chosen some terrific ones. The prime cap management people run 3 funds at Vanguard and 3 funds on their own, the Prime Cap Odyssey funds. We use them extensively at Advisor Investments. I mean, they're one of our biggest holdings. I think we have a couple $100 million in those funds. They're excellent, excellent managers, and nobody is paired up with Prime Cap. They run those funds solo.
So flying solo sometimes, at least in your experience, might be a better way to actually exceed the indexes.
Absolutely. Absolutely. No question.
All right.